Good morning everyone. Again, this is Francis Kaliwan and welcome to another video on lessons in financial accounting and reporting. This is part 3 of our lecture series for accounting for inventories. But before we proceed, let us just have a recap of what we have discussed so far in relation to accounting for inventories. So for part 1, we've discussed the nature of inventories, the cost included in inventories, and the items to be included or excluded in inventory quantities. And then for part 2, we've distinguished the perpetual inventory system from the periodic inventory system. We've also discussed the cost flow assumption, and finally, we determined the cost of inventory using the different inventory costing procedures such as the specific identification, the first in, first out or FIFO, and finally the weighted average. And for this particular installment of our series, our topic will be the measurement of inventory subsequent to initial recognition, or in essence, the subsequent measurement for inventories. And it's based on the lower of cost and net realizable value. So to simplify our discussion for the subsequent measurement of inventories, no, we shall have this concept map. So in our part 1 and part 2 of our discussion for the accounting for inventories, so we've discussed in our cost flow assumption that we have the beginning inventory, we add net purchases for that period or for that year, then we will have our total goods available for sale. And then the total goods available for sale will be the units which will be sold or available for sale, di ba? So which will be sold during the year. So kapag nabenta sila, they will go to cost of sales. Pero pag hindi sila nabenta, unsold, they will be presented in the statement of financial position at ending inventory. Now, how do we present these amounts in the statement of profit or loss and in the statement of financial position? So, for cost of sales, expense ito. Actually, meron naman tayong line item as cost of sales where in the statement of profit or loss. So as a section or as a component of our statement of comprehensive income. And for our ending inventory, it is presented as an asset in the statement of financial position, which will be measured at the lower of cost and net realizable value. Inventories in the statement of financial position should be measured at the lower of cost and net realizable value. So whichever is lower between cost and NRV will be the valuation for our inventories at the end of the accounting period in the statement of financial position. So again, cost comprises all costs of purchase, cost of conversion, and other costs in bringing the inventories to its present location and condition. Whereas NRV, net realizable value, is the estimated selling price in the ordinary course of business less the estimated cost of completion and estimated cost necessary to make the sale. So in short, NRV is estimated selling price minus estimated cost to complete and estimated cost to sell. Why we are using estimated amounts? Simply because we cannot use the current selling price, meaning ang selling price ng inventory at the end of the year, because for once the inventories were not sold at the end of the year. Unsold siya, kaya natin siya ipipresent sa balance sheet, sa statement of financial position. So, kailan siya mabebenta? Next year, probably. Therefore, it is just logical to use the price next year rather than the price at the end of the current year. So, we are estimating the selling price of the inventory next year, including the amounts for amounts to sell the asset and amounts to complete the asset if there are any necessary completion or additional processes involved. The practice of writing inventories down below cost to NRV is consistent with the view that assets should not be carried in excess of amounts expected to be realized from their sale. So, yun yung guiding principle natin in recording the write down from cost to NRV if NRV is lower than cost. So ano ulit yung guiding principle? No asset shall be carried in the books in excess of the amounts expected to be realized. So kung ang realizable value is lower than its cost, then the inventories must be written down to NRV. May adjustment tayong gagawin. But if the cost is lower than the net realizable value, meaning yung price ng inventories natin sa market ay hindi natin ini-expect or hindi natin ini-estimate na magde-decline, walang problema. Cost pa din tayo because we have been measuring our inventories at its cost. Materials and other supplies held for use in the production of inventories are not written down below cost if the finished products in which they will be incorporated are expected to be sold at or above cost. So, halimbawa, meron tayong product, materials and supplies natin ay bumaba yung halaga. Pero yung finished goods, na kung saan i-incorporate natin yung materials and supplies, hindi naman nag-write down. Hindi naman bumagsak ang presyo niya sa market. So, ang materials and supplies, hindi natin i-write down. However, when a decline in the price of materials indicates that the cost of the finished products exceeds net realizable value, the materials are written down to net realizable value. In such circumstances, the replacement cost of the materials may be the best available measure of their net realizable value. Magandang example dito, inventory ng bakery. Okay? So, halimbawa, bumagsak ang presyo ng harina at asukal. Ano ang pwedeng maging epekto niyan? Babagsak ang presyo ng tinapay. So, kapag bumagsak ang presyo ng tinapay, dahil bumagsak ang materials natin, ang harina at asukal, sabi ng standard, the materials are written down to net realizable value. Ibabagsak din natin, ire-record natin ang write-down natin ng ating harina at asukal. Ano yung basis natin? According to IAS 2, the replacement cost of the materials. Ang replacement cost ng harina at ng asukal may be the best available measure of the materials NRV or net realizable value. So, recognition as an expense. So, ano-ano yung mga amounts to be recognized as an expense in relation to our inventories. So, when inventories are sold, the carrying amount of those inventories shall be recognized as an expense in the period in which the related revenue is recognized. So, ito yung mga nabenta during the year. So, as I've mentioned a while ago, so they are to be recognized as expense. Specifically, cost of sales in our statement of profit or loss. The amount of any write-down of inventories to net realizable value and all losses of inventories shall be recognized as an expense in the period the write-down or loss occurs. So, losses from inventories, and typical example dyan ay loss on write-down. So, from the cost to NRV, the write-down is recognized as an expense in the period that write-down occurs. And number 3, the amount of any reversal of any write-down of inventories arising from an increase in NRV shall be recognized as a reduction in the amount of inventories recognized as an expense in the period in which the reversal occurs. Ang ibig sabihin nito, if during the year meron tayong recovery of our write-down. So last year may write-down, this year may recovery. Ano ang treatment natin dyan? Sabi, maliwanag si IAS 2, recognized as a reduction in the amount of inventories recognized as an expense in the period in which the reversal occurs. Referring to number 1. Sino si number 1? Yung mga nabenta na recognize natin as expense. Now, kung may recovery daw, ibabawas natin doon sa amount recognized as an expense. Meaning, the recovery is deducted from our cost of sales. So, cost of goods sold. Yun ang treatment ng recovery. So, for the recording of write-down of inventory, we have two methods. Number 1 is the direct method, and number 2 is the allowance method. For the direct method, so as the name suggests, we record ending inventory directly at the lower of cost and NRV. So whichever is lower between these amounts will be the amount to be recorded as our ending inventory. And now for the allowance method, ending inventory is recorded at cost. So cost muna. And then we record write down using a separate valuation account, which is our allowance for inventory write down account. Okay, so again, for allowance method, inventories are recorded at cost. And then if NRV is lower than the cost, we record the write down using a separate valuation account, which is the allowance for inventory write down account. Okay, so now to illustrate the accounting for the subsequent measurement of inventories, let us have these illustrations. So, problem 1. Based on a physical inventory taken on December 31, 2019, Hirsch Incorporated determined its chocolate inventory at 26,000. Hirsch estimated that after further processing, cost of 12,000, the chocolate could be sold as finished candy bars for 40,000. Hirsch normal profit margin is 10% of sales. What amount should Hirsch report as chocolate inventory on its December 31, 2019 statement of financial position? So, based on physical inventory, ang cost ng inventory ay 26,000. So, that is our cost. Now, how about our net realizable value? So, pag net realizable value, it's estimated selling price. Magkano estimated selling price natin? 40,000 less estimated cost to complete. So, meron daw tayong further processing cost na 12,000. So, 40,000 less 12,000. How much is that? 28,000. How about the normal profit margin? It's not included. So, as discussed in chapter 1 or part 1 of our installment series na profit margins are not included in the computation of the cost of inventory. So disregard natin yon in this particular problem. So again, our cost is 26,000 whereas our NRV is 28,000. Ano yung rule natin? Whichever is lower between these two. So our answer is 26,000. Another illustration, the following information is available for the Century Company. So we have 4 items of inventories for the company. So we have item B, A, B, C, and D. So we have the costs, 102 for A, 45 for B, 24 for C, and 9 for D. And then we also have estimated selling prices and estimated costs to sell. And finally, the number of units. Determine the value of the inventory to be presented in the statement of financial position and the amount of write-down of inventory to net realizable value. Okay, so to answer this problem, of course, first we are to present the cost of inventory. So for A, we have 102, for B, 45, for C, 24, and for D, it's 9. Next is we we also determine the net realizable value of inventory. So ano ulit yung computation natin ng NRV? Estimated selling price, less estimated cost to sell, and estimated cost to complete. All other items are disregarded. In this problem, we only have estimated cost to sell as our deductible amount. So, 102 minus 15, 60 minus 18 for B, 30 minus 8 for C, and 15 minus 5 for D. So our NRVs are 105 for A, 42 for B, 22 for C, and 10 for D. Next is we determine whichever is lower between these two amounts. So we have 102 for A at cost. For B, it's 42, the NRV. For C, it's 22, the NRV. And for D, it's 9, the cost. Kaya dito pa lang, as early as now, we already know sino yung may write-down, no? B and C only. Sila lang kasi yung NRV is lower than the cost. So, we can now determine the LCNRV. So, again, for A, it's the cost. For B, it's the NRV. Also with C, it's NRV. And for D, it's the cost. And then we multiply these amounts to the number of units. So, for A, it's 4,000. For B, it's 6,000. For C, it's 5,500. And for D, it's 7,200. And therefore, our total lower of cost or NRV or the amount of inventories A, B, C, and D are 408,000, 252,000, 121,000, and 64,800 respectively. And pag pilinas natin lahat yan, so 408 plus 252 plus 101 and 64.8. 845,800. So that's the value of the total inventory to be presented in the statement of financial position. Now, to answer the next problem or question, which is the amount of write-down of inventory to NRV, we only determine which items of inventories na ang NRV is lower than the cost. So again, as I've mentioned, it's B and C only. So we have 3 pesos for B, 45 minus 42, and for C, it's 2 pesos. Multiply natin sa kanilang number of units. So 3,000 for B and 55 for C. And therefore, our write-down for B is 18,000. That's 3 times 6,000. And for D, it's 11,000. That's 2 times 5,500. So how much is our total write-down? It's 29,000. We also have other formula in determining the write-down. We just compare the total cost versus and the total LCNRV. So meron naman na tayo LCNRV na 845,800. Computin na lang natin yung total cost. So ano yung cost ng A? 102 times 4,000. That's 408,000. For B, 45 times 6,000. That's 270,000. For C, it's 24 times 55. That's 132,000. And for D, it's 9 times 72. That's 874,800. Versus 845,800, which is LCNRV. So 845,800. Ayun. So our inventory write-down is 29,000. And now we record the ending inventory and the write-down for the allowance method. Meron kasi tayong second entry for the write-down. So for the direct method, again, we record inventories at the lower of lower of cost and NRV. So 845,800 na yon. And then for our allowance method, we record inventory at its cost. So as computed before a while ago, it's 870,800, and another entry for the loss on inventory write-down, which is 29,000. And finally, for our last problem, we have the De Chavez Company. So the Chavez Company reported the following figures at the end of each year in 1,000 pesos. So for 2019, 2018, and 2017, the cost of inventory using FIFO is 660,000, 500,000, and 380,000 respectively. Whereas the LCNRV, so LCNRV na mismo ito hindi ito NRV. So the LCNRV are 600,000 in 2019, 480 in 2018, and 300 in 2017. Also presented are the income and expenses during the two periods. So first, we have sales of 3,200,000 in 2019 and 2,900,000 in 2018. Purchases of 1,400,000 and 1,200,000 for 2019 and 2018 respectively. Selling expenses 450 in 2019 and 330 in 2018, and admin expenses of 300 and 310 for 2019 and 2018 respectively. So, present statement of profit or loss using the direct method and the allowance method. Unahin natin si direct method. And before the computation of the profit or loss, let us have first the entries using the direct method. So again, for direct method, we record directly the inventories at the end of each year using the lower of cost and NRV. So we have these entries. So in 2017, lower is 300,000, or LCNRV is 300,000. So pagdating ng 2018, yan din yung i-close natin. And then in 2018, 480,000 ang lower. So pagdating ng 2019, i-close din yan. And ang ending inventory naman in 2019 is 600,000. So again, we are just recording the ending inventory at its cost, and we close the beginning inventory na wala ng problema kasi yun din naman yung ending inventory last year, also at its cost. So now that we prepared our entries, we can now prepare our cost of goods sold or cost of sales. So let's discuss first the 2018 cost of sales. So our beginning inventory is 300,000, the LCNRV. So all amounts for beginning and ending inventories are based on the lower of cost and NRV. So 300,000. Our purchases for 2018 is 1,200,000. So our total goods available for sale is 1,500,000. Then we deduct our ending inventory also at LCNRV, which is 480,000. So our cost of sales or cost of goods sold in 2018 is 1,020,000. And then for 2019, our beginning inventory also at its LCNRV for 80,000. Purchases 1,400,000. So our total cost of goods available for sale is 1,880,000. Then we deduct ending inventory also at cost of 600,000. So our cost of goods sold is 1,280,000. And since we now have our cost of goods sold, we can now prepare our statement of profit or loss. So for 2018, we have 2,900,000 sales less our cost of sales of 1,020,000. So our gross profit is 1,880,000. And our selling and admin expenses of 640,000 in total, 330 and 310. So our profit for the year is 1,240,000. Whereas in 2019, so our sales is 3,200,000. Our cost of sales is 1,280,000. Our gross profit is 1,920,000. And then we also deduct our selling and admin expenses of 750 in 2019. So our profit for that year is 1,170,000. So again, all inventory amounts beginning and ending are recorded based on the lower of cost or NRV. Okay, so now let's proceed to the allowance method. So again, let us prepare our entries for the recognition of ending inventory and the adjustment for write-down or recovery of the inventory. But before that, let us have this schedule of the comparison of cost and NRV. So we have the required allowance for, say, in 2017, our required allowance is 80,000. So the cost of 380 and LCNRV of 300,000. In 2018, our required allowance is 20,000. So from 80,000 to 20,000, therefore in 2018, we have a recovery of 60,000. Again, the required allowance in 2017 is 80 and it decreased to 20,000 only in 2018. So we have a decrease of the allowance, meaning recovery of write-down of 60,000. And then in 2019, it increased to 60,000. So from 20,000 last year to 60,000 in 2019. Therefore, we have another loss of 40,000. So to record the entry for each year in 2017, so inventory at cost 380 and the loss of 80,000. So the required allowance is also our loss already because that is our first year. Next, for the second year, we close first our beginning inventory, which is at cost of 380,000, and we set up our ending inventory, or we recognize our ending inventory also at cost of 500,000, and we record the recovery. So from 80 down to 20, so we record a recovery of 60,000 in 2018. And in 2019, the cost is 660, the LCNRV is 600,000, so required allowance is 60. But before that, we close first the beginning inventory, which is at cost 500,000 from 2018, and we recognize the ending inventory of 660,000, which is also the cost in 2019, and we record the loss, which is the increase of the allowance from 20,000 in 2018 to 60,000 in 2019. So that is our entry for 2019. And finally, to prepare our cost of sales using the allowance method, so we have these figures, no? So again, we are using our costs. So for 2018, the beginning inventory is 380 cost. add the purchases of 1,200,000, so our total cost of goods is 1,580,000, less our ending inventory, which is also at cost of 500,000. Therefore, our cost of sales is 1,080,000. And then in 2019, our cost of beginning inventory is 500,000 less the purchases for the year, which is 1,400,000. Therefore, our total cost of goods available for sale is 1,900,000. And then we deduct our ending inventory, which is also at cost of 660,000, and therefore our cost of goods sold is 1,240,000. And to compute for our profit or loss for these 2 years, we have in 2018 sales of 2,900,000 and our cost of sales of 1,080,000. So we have our gross profit of 1,820,000. Then we deduct our selling and admin expenses of 640,000 in total. And don't forget our gain on the write-down of 60,000 in 2018. We add 60,000. So our profit in 2018 is 1,240,000. Okay, so as you can notice, no, the profit in 2018 for both the direct method and the allowance method are both at 1,240,000. So saan lang nagkatalo? Sa cost of sales. Okay? 1,080,000 ang sa allowance method. But for dito sa direct method kanina, it's 1,020,000. Next, for 2019, our sales is 3,200,000. Our cost of sales is 1,240,000. Our gross profit is 1,960,000. And then we deduct the selling and admin expenses in 2019 and also the loss on write-down, the additional loss in 2019. Kasi nga, di ba, nag-increase from 20 to 60. Required allowance in 2018 is 20 and required allowance in 2019 is 60. So additional loss of 40,000. So the profit in 2019 is 1,170,000. This same with our direct method. Okay, so ito lang class, no, additional points. In determining cost of sales in direct method, nakalump na, embedded na doon yung mga write-down kasi nga we directly recorded inventories at the lower of cost and NRV. Pero dito sa allowance method, the beginning and ending inventories are presented or are recognized at its cost. Kaya meron pa tayong adjustment sa ating profit or loss na gain or loss on write-down para whatever is the method, whether direct method or allowance method, mag-equal yung profit natin. So adjustment natin lagi yung gain or loss on write-down. And there are other views na ang gain or loss on write-down, kumbaga dito sa computation natin sa allowance method, parang naging other income or other expense siya, di ba? So yung 60,000 other income yan, and then yung 40,000 other loss yan. There are other views na yung gain or loss on write-down ay treated as adjustments directly to cost of sales. So whether gross method, allowance method or direct method, kapag ganun yung ginawa natin na yung gain or loss on write-down ay na-record natin as adjustment to cost of sales, so mag-i-equal ang cost of sales natin for both gross method and allowance method. Pero same pa din naman walang mangyayari ang profit, same ang effect, ang profit natin is parehas. As sinabi lang naman kasi ng standard, no, the loss on write-down and the gain on recovery of write-down is presented or deducted, kung deducted kung recovery or added kung loss sa expenses related to inventory. So hindi malinaw kung sa cost of sales ba siya directly or iti-treat ba siya as other income account or other expense account. Basta ang importante dyan, our profit or loss for the year, whether using the allowance method and direct method will be equal, no? Regardless of the method, the profit or loss must be equal. Okay? So that is the discussion for the subsequent measurement of inventory.